Good afternoon. Good afternoon, everyone, or good midday, midday. And for those that are stopping by, hello on YouTube. I am Bagadon. This is StockMarketCaddy.com. It is Monday. Let's take a look at the calendar here. It is Monday, July 29th at about noon. Couple of things going on here this week. A few things. No, we're not big, news people or noise people, but we always, want to pay attention to some catalysts that could upset the apple cart and get things moving. Of course, we like the volatility. What are those things? Well, we have earnings underway. We have over the next couple of days, I think we have Microsoft coming out with earnings. We have Boeing coming out with earnings. They'll probably lie, cheat, steal. They always do. Um, and they all do. Even if you know what the earnings are, you don't know what the market reaction will be. But so it's safe to say that we'll get some market volatility. We do have tools that can give you quickly the projection of what that move might be in the underlying. Let us know if you have an interest in that, and we'll let you know. If you want us to punch in, by the way, if you want us to punch in any of your stocks that you're either in or tracking or thinking of tracking, and you want us to punch it into Swing Machine on any interval, I'm happy to do that. And we can show you. On Wednesday, we do have the Federal Reserve. The academic stooges for the banking cartel. We won't go down into that. But there's some great books, some great videos about that. It is what it is. Are they going to cut interest rates as everyone's waiting with bated breath? I don't think it really much matters. If you know, if you've been following the markets for any length of time, like maybe in the last 10 to 15 years, our take on this is that the Federal Reserve, no matter who's in charge, even the political parties, they have managed to fly this plane into what we would call a financial box canyon. And I'm not a pilot, but I like to watch some of the pilot podcasts. And if you have a small plane and you take off from Denver and try to climb over the Rockies and fly into a canyon where the walls of the canyon begin to narrow and the height of the canyon is higher than what your plane can navigate, then you got yourself a shit mess problem. You really do, because you can't get over the mountain. You can't turn around. You only got one thing to do, and that is jump out if you got a parachute or crash. So, what can the Federal Reserve do? If you think a measly 10% correction in the Nasdaq or a 2 or 3% correction in the S&P is going to throttle the Federal Reserve, like, oh my goodness, we got to cut interest rates. Oh my God, cut interest rates. And you think that those interest rate cuts are going to provide enough thrust to keep this plane going, then have at it, man. Take your IRA account, your 401k, and plow it in there. I say that facetiously. There is something in economics, which is a pseudoscience, but it's the law of diminishing returns. It's like when you first do it, it's kind of like having, although I don't drink, but there was a time way back when I just chose not to do it anymore. It just made me feel like shit. But even a couple of beers, but it's usually the first couple of beers, make you feel, you get a nice little buzz, I guess. But by the time you do it, like the 10th time, the 12th time, gives you nothing but a big ass headache, right? Well, the Federal Reserve has been, ratcheting interest rates and buying bonds, and they got this propped up here. And so what can they do? And if you think they're going to cut rates so that they can keep this plane flying, there's a problem in that the average home in Boston, which is 1,950 square feet. I mean, that's call that a house, but that's the average size home up in Boston. The average price for that home is $709,000. To get into that house and to maintain that house, you need to have a household income of $188,000. Oh, okay. So I suppose if we cut interest rates and and then people borrow against that because the banks tell them the house is worth that, so oh, you got to cut rates. I need my house to go to 1 million, 1.2 million, 1.5, and then I'll borrow more, and then I'll go get another house. I'll go get an Airbnb, and I'll get in the Airbnb, and I'll leverage that up too, and I keep leveraging and leveraging, and I mean, that's what's going on. So if they cut interest rates, um, whether they do it now, they do it in August, they do it in September, they can do it all next year. They're going to do it and do it until they can't do it anymore, and the market just has no more lift to it. There's something called, we've long since left this behind, but at some point they're going to hit the proverbial earnings mountain, and look out, it's going to leave one hell of a mess. This in 2005, and I know this is like ancient history, right? But exchange traded funds did not exist before 2005. There was only a few of them. Most people probably don't even know what an exchange traded fund is. ETFs now, there are more ETFs than there are stocks. And the problem with ETFs is that, they have some advantages, but they have a mechanism to create shares on the way up. So it's very orderly. The plane just keeps climbing and climbing and climbing and climbing and going up and going up and woohoo, you know, and it just keeps creating shares. And it is just beautiful. It is like a money-making machine, and everything is just right with the world. And who cares about this or that? Nobody cares about the Olympic crap or the political crap. Nobody cares about the East. Nobody, I say that facetiously, nobody cares about nothing because they're just, hey, yeah, my IRA account, my 401k just keep going up. Okay. Well, when that market is just petering out, and there are signs of it, folks, there are. When those folks go to their little, account, they go to get in. Good luck getting in. They'll probably turn that off, just like everything else, right? Maybe that little shutdown we had with the airlines, maybe that was just a little precursor. Maybe they were pinging the markets. Maybe imagine if they did something like that to the markets. They just shut it off. Uh-oh. Not going to affect us. Nope, because we trade proportionately and we'll trade when they open back up again. But when the people go to push that little button and say, hey, get my IRA account out of those ETFs, well, there's a dastardly little thing that's going to have to happen. And that is those ETFs are going to have to destroy shares on the way down. It's never really happened. They've never really been tested, and it's like, it doesn't matter until it matters, maybe they can handle it. Maybe they can't. So, I see what you see on the Twitter sphere. Is the NASDAQ going to go to 25,000 before it goes to 15,000? Is the NASDAQ going to go to 50,000? Is the NASDAQ going to go to 2,000? For us, we could care less. We could care less as long as it's open, as long as it's moving, and we'll come in and we'll trade and we'll extract our cash flow from the money flow. And we have to learn. We have to, put our money to work. We have to take some personal responsibility. I mean, it's a lot of things that just doesn't wash today. Not to go, I was hearing somebody say the other day, it was funny. They're like, Trump just doesn't exactly have the right message. you know, his message, might be, and I'm not speaking for Trump, but let's just say the conservatives, we're going to build an economy. We're going to bring back jobs. That's what we're going to do. And the other side is like, we're going to have basic income. You don't have to work. You can go to the beach and play hacky sack, for the rest of your life. And we're going to give you a guaranteed basic income. That's where they are. That's where we be. I mean, which message do you think? I guess we're gonna find out. Are we going, is this society ready to go to work? Does this society want to work? Or is it gonna play hacky sack? Now, if we play hacky sack, go to the beach, play hacky sack. Um, this this plane, this market plane is in serious, serious trouble. So, and then everybody will be wanging. You'll remember, you'll say, man, I remember I heard some guy on some, and he was saying, but I'm not the guy Dent. I'm not telling you that, that it's going to be this, it's going to be that. Um, it, there is the law of large numbers, and it will occur. And can I tell you precisely when? No, but I can tell you this, that our members and us, Susan and I, are not going to miss it. No, no, we're not. Because you can see here, like this is and you're watching maybe, you folks, this is the NASDAQ. 1 minute, this was 19 minutes ago. And if we have a member, which we most certainly did, and they bought the NASDAQ at 19,213, they would have used about $1,900 in margin, and they could close that trade for $1,600. What's the percentage return on that, right? But nobody would really believe it, and that's okay. We need the market fools, right? Or the people not even, the buying hodlers, their husbands are out. I'm getting a kick out of it. I saw it was a meme, it was a video. Um, in Japan, they call them the working men, the salary men, and the women um, in Japan are called the Watanabes, and they do all the trading. And this was a video of a collection of sorry about that. So, this video was, all these ladies, all white ladies, not that I met noticed, but that's the way they presented themselves. And there's a collection of them. I mean, it must have been 30 or 40 of them. And they're talking about the white guilt and everything, and how important it is to raise your kids with, the whole white privilege thing. And I'm just thinking, what, man, imagine, the husbands, I guess you get what you get. They're out there slaving away, and these fools are, spouting what they're spouting, and they have no idea. They're gonna get smashed. They're gonna get economically smashed. And maybe that's what has to happen. So that these YouTube influencers, peddling this garbage, that want to play hacky sack all day, they have to get their ass to work doing something so that they can pay for the Lexus and everything else. It's really getting obscene, but we're going to have it out in another 100 days or so. And I can tell you the market volatility is going to be awesome. It's going to be great the next 100 days, and it is going to be like the next few years is just going to be a trader's nirvana. Nirvana. And if you're interested in not trading the news, you'll get a kick out of it, but you want to learn how to trade the money flow so that you can extract cash flow and you can just shut all that stuff off, and just not let it bother you. I mean, who cares, Who cares? Yeah, I mean, did you see the fools up in the villages? I mean, really? The villages? I'm here in Central Florida. Have you ever, I don't know if you ever driven through, there's hundreds of thousands of them. And they had 200, I think they had 200. They all got in their golf carts and drove around the villages, with signs for Harris. I mean, that's really productive. But, you may think they're like 70 or 80 years old. No, no, they're probably like 50, 55. Bunch of retired, government workers from the Northeast sucking off the public teat, you know and they come down here. They're all retired, superintendent of schools. They somehow their positions get magnified. They may have been, God knows what. I mean, they may have been a lunch aide for all you know, but suddenly they're all assistant superintendents and, assistant to this, assistant to that. Their careers, take on exorbitant growth in the villages. Jesus. So, that's living. That's living. So it is going to be a hoot. It will be, what we want to do. And it's just the way it's the way the world works. For us, it is. We want everyone to do well. We want everyone to, we've certainly done our work and everything. But we're going to profit from the stupidity. And if that's callous, if that's whatever, that's the way it works. It always has. You need to have that in any market. They're going to get taught a lesson that they didn't learn, or maybe they weren't exposed to 1999, 2000. Maybe they weren't even in the market. I mean, let's face it, there's some people just getting started in the last 5 or 10 years. 2008 is like ancient history. But the market crash of 1999, 2000. I mean, what's that? That's crazy. We start talking about 1987, all of a sudden, you're a boomer, you know. But it doesn't matter, like I say, we're just gonna trade. If you have any questions, you want us to punch anything in, we're happy to do it. Don't let the other stuff upset you. I hope it serves as motivation to get out ahead of it. Don't let the bastards, don't let them impact your life. Don't let them take you down, you know. Um, even with the Bitcoin, I noticed that Trump spoke at the Bitcoin conference um and RFK did too and everything. And I don't know what Bitcoin is going to do no more than I know what the S&P is going to do or with the Nasdaq. I mean, maybe the Nasdaq's going to 30 or 40,000 and the S&P is going to 10,000. Maybe Bitcoin's going to $1 million a coin. Maybe it is. Maybe it is, right? If it does, a Chevy Impala isn't going to cost you with 6 cylinders now. Okay, I'm not talking four-cylinder hybrid. I'm talking a Chevy Impala, 6 cylinders, baby. It's going to go from 78,000. Yes, it'll cost you $78,000 for a Chevy Impala, 6 cylinders, all gas. That's probably going to cost you like 250,000, you know. But but on the other hand, um, maybe the S&P goes back down to 900. What? No way. No way can the S&P trading at 5,500 go down to $900. No way. That could never happen. Oh, okay. That's what they said in the winter of 1999 when the Nasdaq crested 5,000, you know. And 9 months later, it was trading at 900. It went down 90%. No way. Oh yeah, yeah, it did. It did. Yeah, but look at it now. It's at 20,000. You just gotta, it just goes to show you gotta buy and hold. Oh, okay. Well, not if you were, maybe if you were holding the indices, maybe you would have got away with it. Maybe. But if you were holding AOL, America Online, you were holding um what did I messed up our thing here. I'm sorry, I didn't mean to do that. You were holding some of those things, um, they just went away. They just went away. So can it and then it took like 10, 15 years to even get back there. And it wasn't even with the same companies, right? So if you own individual shares, I mean, maybe you survive, maybe you don't. They can go to zero, they can go to zero. They can go out of business. Sure they can. Um, you know, I think Merrill Lynch was its own company. It isn't anymore. It's part of Bank of America. I think Bank of America bought it what, for $2 or $3 a share. I can remember the stock pimps at Merrill saying, boy, if Merrill ever goes down, there's going to be a real problem. Not Merrill Lynch. Okay. Remember the commercials, the bowl and everything? You don't see those anymore, do you? I don't think so. It can happen. What are you going to do? You got a plan? Oh my God. I was also, at 29 minutes, 29 minutes. Look at that. $2,200. You would have needed 1,900. You're up over 100% in 29 minutes. Gonna get all excited and all lathered up and stop. Oh, I gotta push my button and put my whole IRA account in the NASDAQ. I wouldn't do that. I wouldn't do that. This is a minute interval. Oh, I see what I did. I goofed that up. I gotta slide this over. There it is. I'm sorry. I goofed it up. I wouldn't do that. We trade intraday. We trade intraday. We trade the here in the now. Um, it pisses them off. Pisses them off. But there's gonna be a comeuppance. So like I say, maybe Bitcoin is going to go to $1 million a coin. I kind of feel for all the people because they look like really young, energetic people, and and it's great to believe in something. I think you do need to believe in something. I do. I just believe in yourself. Just believe in yourself first, right? Um, when we started Stock Market Caddy, Susan and I we're doing this by ourselves for like 10 and 12 years, just by ourselves. And then we started, Stock Market Caddy. And I didn't know if anybody was going to listen. I didn't know if anybody was going to subscribe. But I said, we'll go ahead and build it. And even if it's just for one person, but we had to believe in ourselves because there wasn't anybody encouraging us. And to the contrary, everyone was telling us, no, no, don't do that. Um, when it comes to the Bitcoin and I see those conferences and everything, I just get makes the little hairs on the back of my neck stand up. Um, see, because I'm not, um, I don't like to follow the crowd in much of anything. I get a little uncomfortable in crowds on anything. I just don't like crowds. And because they can get it wrong. They can get it big time wrong. And that guy who's standing up there, whether it be RFK, he's not going to do anything. But Trump, I mean, he could be. I mean, I don't know. What does he know about Bitcoin? Does he know anything about Bitcoin? Is he gonna, he's gonna do whatever? He's not gonna, sorry. Um, what happens to Bitcoin if the dollar goes, to shit? I mean, that's the other part of it is, not to get into any kind of academic discussion about Bitcoin, but you got to have dollars, right? I mean, I can't pay my electric bill with Bitcoin. Still can't. But we won't go there. Our thing would be if you want to hodl something, whether it be Bitcoin, whether it be teddy bears, whatever, gold, houses, if you want to hodl something, hodl it, but learn how you might be able to hedge your bet if it goes against you without actually having to sell that something. Right. So I don't have a problem with you hodling something. Fine, do it. And we do. We do as well. We have some long-term investments, not a lot right now, but we have long-term investments, but we have strategies to hedge ourselves, to hedge our bets, and enabling us to get out if we have to get out. Mhm. It is what it is, folks. If you want us to plug anything in, let us know. And I'm happy to answer any questions you might have. This is not that unexpected, this little bounce here today. It's a Monday. It's a mutual fund Monday. We have the Federal Reserve on Tuesday. So they kind of, the volumes kind of dry up and we get this little bounce into it. Not uncommon. There's a strategy, by the way, that you buy the market, especially when it's down on Thursday or Friday, and you turn around and you sell it on Monday afternoon. And the thought behind that is that the stock pimps in Wall Street, at Wall Street, that they know that the money is going to be coming in from um, the salarymen. It's going to be coming into the market off their 401ks and IRAs on Monday. So they like to buy the market on Thursday, Friday, and then sell it to them at a higher price, capture the spread. And then they just fill all that shit paper that's worth less, going to be worth nothing at some point, much of it. And they just stuff it in their account. And now I know what you're thinking. Oh, Microsoft is always going to be here. Okay, maybe, I guess, maybe. You know, um, It's it's hard to believe it was 24 years ago. Sun Microsystems, what a horse that company was. They were selling these things called servers. Symbol was SUNW. CEO John McNeely. John started selling himself. He just said the numbers just made no sense. He couldn't even there was no way he could even offer stock options. There was no way he could keep up that kind of growth. It just they were hitting that box canyon. They couldn't go any higher. You fly too close to the sun, your little wax wings are going to melt. This market is got wax wings. It's financially engineered. Oh, I don't know. Is anybody minding the store? Does anybody give a shit? I mean, you see in the text messages, I'm kind of digressing a little bit. You see the text messages of the Secret Service and the security people up there in Butler? Oh my God. I mean, it never even dawned on them to get the guy off stage. I mean, one of the guys like, hey, that guy that we were looking for? Yeah, he's at a picnic table, but I'm going home. I'm on break now. I gotta go home. Oh, okay. Have a nice day. Hey, we'll see you tomorrow. All right. Like he's got his lunch pail. I'm serious. I think it was one of the Secret Service guys. He actually, now it's 90 minutes in front. It's like, oh yeah, that's suspicious character. He's right beside my car. He's eating there. Maybe somebody want to check him out. Oh, okay. Hey, thanks, bud. Have a nice day. Oh, Jesus Christ. But that's the attitude. I mean, do you think that anyone in the Treasury Department or anyone in government is concerned with this financial box canyon that everyone's being led into? Not really. Nah, no, to create a crisis, they'll have a chance to remake it. You know, maybe maybe they do. They're never going to do away with markets. That is going to happen because it's their wealth too. That's the beautiful thing about markets. But we may be at a much different level. They don't care. They didn't care about. Yeah, this is the problem. They didn't even care about. Maybe it was just as simple as they just a bunch of government workers didn't give a shit about Trump's safety at all. They didn't give a shit about anybody's safety. They didn't care. They just didn't care. I just and I'm just reminded this, it sounds like a broken record, but I sat down with Susan. It was 2000. It was 2001. Said, Susie, nobody gives a shit about our wealth, the assets that we've accumulated. They don't care. I mean, I don't want to name companies and everything. I mean, we did just fine. We got through it just fine, but it was embarrassing what they told me. You know, they were asleep at the switch. They were morons. So Susan said, "Okay, I'm with you, Don. Susie and I have been together since we were 17. You know, but what are we going to do?" I said, "Well, you're pretty good at math." We had no idea about stock market caddy. That was not on the horizon at all. Was not even a consideration. Trust me, it wasn't. Nope. We were just concerned with preserving and protecting our assets. And I said, Susie, why not, create cash flow? Why not trade this like a business? Trade this stuff. Can we do that, Don? Yeah, we can do that. But they don't allow it here. They don't allow it. Oh, well, we'll find firms that do. And we started from there. Susan spent, I mean, this is the sort of thing that we did. I have binders. Susan would go to the internet and I would go to and I would help her, find different sources. And we started printing. I mean, we went through reams and reams of paper. And she was putting it all in acetate. And we built ourselves all these binders on all the technical indicators, on everything, because we didn't know anything. We didn't really know. And we wanted to have the reference, and we set out, and it took it didn't happen, in 5 days, you know didn't happen in 30 days. I'm sorry. You could do it now. We think we can help you expedite things. You don't have to go all through that. I'm not saying you got to do that, but we invested a tremendous amount of time, a tremendous amount of capital, learning, making mistakes, and we share those mistakes, and we share now those tools. Some people say, well, why would you do that? Well, the market's deep. It doesn't hurt us. If you trade the NASDAQ, and, if you traded the NASDAQ 40 minutes ago, that's what that means. You would have used $1,950 in margin. You'd be up 1,800. That's about 100% return. In order to move this NASDAQ a tick, you would have to come in with 100 contracts just to move it a tick. That's how deep it is. So no one's going to, if someone's out, if we got, our members are all watching the NQ, we're not going to hurt each other. Can't move that market. That, a measly mini or two. You'd have to have 100 of them to move it a tick. And I don't think, we have anybody trading 100 of them. The companies are, though. So if this is a mini, and you're up 2,000, if you traded a micro, you'd be up 200. But if you traded 10 minis, you would be up 20,000. And the banks are trading hundreds of these things, thousands of them. They are. That's how come they live in the Hamptons and in Malibu. And they get the big boats and the big yachts. The people who have sent them their money, they get what's left over, bones. And then, when it ends, it will end like they always do. And it's just, like Matthew McConaughey in the movie Wall Street, boom, boom. The parade comes to town. Remember, he's describing to Tom Cruise, the parade comes to town. And everyone gets all excited. And then the parade leaves town. And then there's a whole new crop. And then the parade comes to town again. Then they buy into whatever they buy into. They could buy into, the internet bubble itself. Oh yeah, how could you be so stupid to have ever bought into the internet bubble? That was stupid. Never would have done that. Oh, okay. And then it was the fiber optic cable, fiber optics. Everything was, wow, you don't want to just buy the internet. You want to buy fiber optics. That's where everything is. Global Crossing and all those companies. That was a bubble. Tons of money to be made. Tons of money. And then it was devices for a while. There was a company called 3Com, symbol 3, COM, 3Com. You know what they made? An electronic day timer. You guys probably don't even know what a day timer is. We used to have these little leather pouches we'd put in our suit coat. I don't even know if anybody wears suits anymore. We used to wear suits all the time. And we had these things and we kept them in our suit jacket. And we'd take them out, and it held some inserts that you would get from a company called Daytimer, something called a calendar, and you'd write your appointments in there, and you'd Daytimer. Well, 3Com came out with an electronic Daytimer. Wow, I had one. Yep, we bought the stock at $5 or $10. Thing ran to like 150. I was going to take a 3Com. It's an electronic day timer. You had a little stylus. You had a stylus that you had to hit. You know, and they went out of business. We made a ton. Yeah, we made a ton. But they're not around anymore. And then of course we get into remember before the smartphone, there was the research in motion. You guys probably don't remember that. RIM. RIMM from Canada. They had the Crackberry, the Blackberry. And you had a little keyboard and you type your little fingers and your little thumbs. That everybody was super secure. Even Obama had a Crackberry, Blackberry. That thing ran like hell. They're out of business. They're gone. They're gone. 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 Nokia was, big ass company for a while. And then of course the smartphone. And then we had the bubble on the smartphone. And then we got social media. There's a little bubble in social media. We ran that for a while. And now it's AI, AI, right? Tons of money to be made. They always got something they're selling. The parade comes to town. But they don't tell you when it's leaving. Not quite. And, you don't want to be sitting on the curb eating stale popcorn when the parade leaves town. You're going to be looking at elephant dung. Ain't going to be anything left. It's going to be a big hulk, a carcass. So for us as traders, it just doesn't matter. We may not see the start of the parade, but as it's approaching, we're going to enjoy it. We're going to enjoy the ride. But then when we start seeing elements, indications that the sucker's leaving town, and then we're going to sell it. We're going to sell a ticket to somebody else. Sorry. That's what we're going to do. I'm going to wait for another one. There'll be another one. I don't know what's going to be. There always is one. Crypto has its own, but you can't learn to hedge. But if you just going to get in there and randomly buy and sell options or buy and sell stock, It's probably not going to be a real efficient use of your time. It's probably not going to be a real efficient use of your capital. Probably not a real efficient use of risk. And you wind up making decisions emotionally. And think about any other business. I mean, if you go into business, I don't care what it is, and you're not disciplined, you're not patient, you don't have a business plan, you're not generating any cash flow. I mean, you may have fun doing your business, but if the business isn't, you know, generating cash flow, you're going to be out of business. You're going to be gone. Right. So we're trying to help folks learn to trade as a business, trading their own capital, not trading anyone else's capital necessarily. I'm not gonna, although maybe in time you will want to do that. A lot of regulations and stuff. And that's why we don't make any recommendations to buy or sell anything. I'm not a broker. I'm not a financial advisor. I'm not looking to manage your money. And we don't do that. Um, we have some family accounts that we can do. But that's that's the extent of that. Maybe you could do the same thing for your family, for yourself, is the idea. If you want us to punch anything in, let us know. Let's look at the VIX on a daily basis. Let's just punch this up. Try to change just that. We look at the VIX. So the VIX is the fear gauge. It's at 60. It's still there. It's pulled back a little bit, pull back to about, toward its mean. And as it's pulled back, the S&P in particular has bounced a little bit, right? So we were in here in panic, and the market is just about in proportion. S&P should be right in here, but it's come right back to the middle. Then there's going to be a big decision to be made. Which way are we going? Is the market going to, run up? So they may decide to wait to see a little bit more of what the Fed is maybe got up their sleeve or what they got a hint for. They might. We'll see it. This daily signal, by the way, the daily on Swing Machine went long 58 days ago. 58 days ago at 52.64. That's what that means. And if you had done it with a mini, now to take it overnight, you got to have about $18,000 in capital. You would be up on one of them. You'd be up real time about 12,000. You'd be well off of your high water mark because the trend is dipping. That's what all that means. How do you manage that? How do you hedge that? How do you do that sort of thing? That is what has to be learned, just like driving a Lamborghini or flying a plane. It isn't just the signal itself. You don't want to be thinking so literally maybe, or so singular, just like one trade, one thing, it's kind of a mosaic. It's kind of like a painting, like a golf game. It's fine if you can hit your driver 300 yards, but if you can still play a great round of golf if you hit your driver 250, but you can hit your other clubs consistently. If you have a sand game, but if you have some weakness, if you don't have a short game, you don't have any putting skill, you don't have distance control, then you're going to struggle out on the golf course. If you are trying to trade the markets and you don't understand how to trade, you don't understand how options function, you don't understand the difference between a credit spread and a debit spread. You don't understand even what a futures is. You don't understand, what the margin requirements are. You don't understand what it means to trade in proportion. You don't understand profit factor. If you don't understand all those things, then you're really, when you're competing with our members, you're really at a distinct disadvantage. And they don't know what they don't know, right? So what we try to do is, during the Q School is in a systematic fashion is try to make you aware of all those different things and teach you, and so you can absorb them and put them into your game or into play your game. That makes sense. I hope so. Now, if it's not, inexpensive to join and to be with us, but we think it's really, really good value. We try to reward the long-term commitments as well and return value. But if you want to, you know, go join the Nigerians. They seem like they're really nice guys. I think that I'd love to have a beer with them one day. That would be always fun. I'd drink a Diet Coke, but am I going to pay $15,000 to fly out to Napa and have a dinner and wine and cheese and meet one or two of the Nigerians and then turn around and fly home and maybe watch some guy, make a spiel or something on an overhead? Am I going to spend 15,000 for that? Probably not. I'm not going to do that. No, yeah, it's tongue in cheek, right? Any questions, let us know. Um, it's really, really, it's such a good time to be a trader. The markets are so fat and rich. The technology is so fast and so reliable. The cost to execute is so minimal. What a great way to go. They're getting deeper, and it's only going to get better and better. It is. And so if later today, because we can only go to 1 o'clock today, if later today the markets decide to turn down, I want you to know that we'll see it, and our members will see it too. Maybe it'll be tomorrow, maybe it'll be tonight, but they'll see it and they'll take action and they will profit. They will. Takes time, whether, maybe hunting, I've never hunted, but I'm sure there's a skill to it. I don't think I could probably just go out and buy myself a deer hunting rifle and the camouflage, take myself out someplace and bag myself a big deer. Um, there's probably a skill about with that. Do you think? I wouldn't know where to begin. Fly fishing. Hmm. I thought that's all I had to do, go to Bass Pro Shop, get the gear, and I spent I spent a year or two screwing around trying to catch trout. So I was making so many stupid mistakes. Well, hey, Abby, it's me. It's relax, girl. She's nervous. One of the things they did is so silly. If anybody's a fly fisherman, they got a little eyelet. They got a little eyelet by the handle, and when you're coming out of the water, that's where you're supposed to place the little hook, right? I didn't know that. I'm like, what's that little eyelet there for? Right. And now I was, it's I didn't know what I didn't know. So I fed the line through there. Can you imagine that? I fed that the fly line through that little eyelet. Well, you're supposed to, have a lot of free line. So you can cast this little fly. I fished like that for like a year or two. And some guy finally, it's like, what are you doing? I didn't know. I didn't know what I didn't know. You don't know how close you are. You might be really, really close to getting it done, and you may not be, right? We've done this. We've been doing this a while. You send us your scorecard, during the Q school or even afterwards. There's a lot that we can learn from your scorecards. We can tell. We can tell what kind of trade what you're doing with your trading. And we may not be able to oh, Abby, sorry. She's This is a middle of the day occurrence. This happens because, like your neighborhood, Amazon is flying up and down. And this golden retriever, she's only 60 pounds. She don't like Amazon. So I'm sorry about that for that noise, but it's just me right now. Susie's at the gym. She's done. You're done for the day. But the point being is the first step to learning anything is becoming aware of maybe something you don't know. And it can be unsettling. It can be uncomfortable, whatever that something is. And you have to make a decision. Is this something I want to pursue? And it's okay if it isn't. It's totally okay. I don't suggest that this be for everybody. I don't. Um, if it is something you want to pursue, we're going to try to help you become aware of all those things. And there may be more things that are going to make you even more uncomfortable because there's a lot. There is a lot. And what we would rather do is lay all those things out in the open in the beginning, as opposed to see you struggle months from now and then say, oh, well, you could have done this and you could have done that. And you could have, wouldn't it be nice to know what those things could be? Right. I'm not saying, I mean, we keep going deeper. I mean, there's always something new, even for us, but we try to, you know, try to keep everybody up to date on that. But during the Q school, it's very intense, and we try to lay that open. Um, and then you may not totally perfect it, but you'll begin to um, decide what works best for you, for your own taste. What are the markets that you want to trade? How much leverage do you need to stay with? What are your objectives? What hours do you want to trade? Learning to control the things that you can control, just identifying those things. And then ultimately, um, you wind up doing it so frequently, so much, um, that it's not anything you even think about. You just put, the toothpaste on the brush and brush your teeth. I don't even know what Susan, did this morning. She goes, I had a good morning. I have no idea what she traded. A lot of times I don't. No. Nor does she, necessarily know what I'm doing. It just is. But it starts with the education. And I think hopefully that makes sense. If you've got anything you want us to punch up, if you've got any questions, let us know. I won't bend your ear. At 1 o'clock, we'll have to turn down. We're working on something. Talk about peeling back the onion. And that's what happens. We start working on a project and it's like, wow, we could do it this way. We could do it that way. We could do this. And then on top of it, we could do this, this, and this. So it never stops, and it won't. And we share these tools with everybody as we go. We run in spurts. Sometimes we have a ton of people in the Q school, and sometimes we don't. So then, we get into a mode of either, teaching in the Q school or working on the programs, and at the same time doing our own trading. Pretty normal action right now. The trader, by the way, you probably wonder, well, how come he doesn't have any trades on? It turned itself off. It put on a trade last night. It made money, and then it traded early this morning, and it has a daily profit that we're tracking, and so it turned itself off. So it's going to be pretty dull, um, and that's why it's not trading. And we kind of want to get um, not a feel, but we want to get more data from this. So we're going to have to stay with it much of the week. Any questions, let us know. Okay, everyone. At 1 o'clock on YouTube, we will have to turn down. Any questions though? Um, be sure to visit the site if you haven't already. Feel free to give us a shout. And time, time can't be bought, can't be sold, can't trade it. It is what it is. Don't want to waste it. We don't either. We want to be able to maximize it. Everything else is going to keep, going on. And 69, if we were on a minute, 69 minutes ago on the S&P, this 1200, 68 minutes is 2200. Now, this is not, it's presented in a game-like fashion. We want it to be fun. It isn't a game. It isn't. Members are very, very serious about what they're doing. We are too. We want it to be fun, though. It doesn't win on every single trade or anything of the sort, but this is a visual view of something that is central to what we do. It can be, mechanized, motorized. It can be automated. Can trade multiple time frames against each other, with each other, multiple markets. And we're not adding complexity for the sake of adding complexity. It can invariably, what happens in the beginning is sometimes folks, trade a little too frequently, a little too fast, a little too much, make things a little more complicated than need to be, and then wind up just kind of slowing down and coming at this every day. Doesn't have to be a full day. It really doesn't. And just kind of just take your time. There are 24 trading days in a month if you count Sunday nights, if you're trading futures. So there are 24. And if you like to take Fridays off, which we do, right? We do love Sunday nights. Now you're down to 20. If you're able to come into the market, if you have the patience, the discipline, the skill set, the tools, I hate to break it down this way, but we do, right? You can too. And you're able to extract $100, then yes, you'll make $2,000 in a month. Now, if lose $100, yes, you could lose 2,000 if you break it down that way. But what you don't want to do is lose $2,000, on one trade. You've got to start out small and incrementally, and we have other charts and price charts that you can start out very small, and you can start out, from a time standpoint or a price standpoint, be very incremental, and even with your margin can be very incremental. If you were trading a micro contract here, as opposed to a mini, you wouldn't be up 2,000, you'd be up $200 as an example, right? So we didn't always have that in the beginning, but we do, today, fortunately, in the markets are getting bigger and deeper, and more people are playing, which is a good thing. They're very liquid, meaning the difference between the bid and the ask is very small. We don't, futures, we have a beginning balance of 25,000. You don't have to have that, right? You don't. If you're trading micros, you can get a futures account much smaller. If you're trading stocks, yes, you have to have a minimum in your what they call pattern day trader, which isn't a judgment term, it is by the government, then they come in and say, well, you got to have a minimum of 25,000 and you got to be concerned with the wash sale rule and all this shit because they really don't want you doing it, right? Like everything, right? They'll do it for millions of dollars, but they don't want you doing it. They need your ass outside working on, at the grindstone, right? But Pelosi's husband, he's coming in and, plunking down a million bucks on some Tesla options, right before a government contract or what have you. There's going to be no stopping that, but we can see the footprints of some of that action, right? We can see those footprints, and we just got to get our share. That's all. So we don't bitch about it so much. It is what it is. It's not going away. And but if you just send them your money and all you're doing is buying and getting diversified and sitting back and going to work and hoping that it's going to get done and hoping it's going to be there when you retire, I hope so. I hope it does for you. But even after you retire, what are you going to do? You're going to go all cash. Then what? You going to learn then? Maybe, maybe not. You're never too young. You're never too old. We're not gonna, limit you. So we're gonna have to turn down. I'm sorry. It is 1 o'clock. You're welcome to give us a shout. Markets I mixed her a little bit. We got earnings the next couple. Well, we're in earnings season, so they'll be coming out. We got Microsoft and Boeing this week, among others. There'll be others, and then we got the Fed, and then the market's going to be volatile, and then it's political season. And if you're piling money into a retirement account and calling up your telebroker and checking on your account value, day by day and just hoping that the market just keeps going up and up and up. You're welcome, Darren. Good luck with that. I hope it works out for you, but I think that it's got to be very, very unsettling. I would find it very unsettling. I did find it unsettling. Let me put it that way. I did. I'm like, Susan, this is nuts. We're not going to leave fortunately we did what we did. And fortunately, so, it is what it is, folks. All right. Thank you. Thank you for stopping by. If you push the notification button when we punch up, you'll be notified. We don't have a set time. Try to do it around midday, probably later at night, give you a glimpse of what's going on, what we're doing. If you join as a monthly member, you'll get a 1-day hall pass on the Zoom feature. If you're an annual member, you got to go through the Q School. You get all the programs and you get the Zoom link, every day. And may not need it, but you know where to reach us. And but you'll have everything that we have. And maybe you want to have different markets. Maybe you want to have different intervals. Maybe you want to have it with a transaction, a tick count. This isn't the only tool, right? This isn't the only tool. We got other tools. And our option selector, as you can imagine, was teeing up, the last couple of days, a whole host of call options. Hard to do. Trust me, they're in the money, and I'm hearing from folks that got them. And it was also a signal too, for our, take some profits on the put options. We are putting on some options on the Dow for the latter part of September. We'll manage those and some spreads, but we wish you the best. Any questions, let us know. I'm going to wait about a minute because you're on delay, but then we're going to have to turn down and get back to work. Thank you.